Good afternoon, traders. This is Chris Buss with Traders Profit Compass. What I'd like to do today is to introduce micro futures to you as a potential solution to some really common problems that traders have. And this is not going to be a video about the specifics of trading futures, but I just as an orientation video on what they are and how they can be used. And if there's any interest, we can drill down in later videos to get into some of the nitty-gritty or specifics of trading them. But there's a lot of times where people will ask me or say, "Hey Chris, it's great that you're a full-time trader, that you can sit in front of the screen all day and trade, actively trade during the day, but I've got a full-time job. How am I going to do that? I really want to pursue that, but I'm really kind of locked out because I have a regular job." And certainly if you're in that situation, you don't want to try and trade on your phone while you're doing your job. You certainly don't want to, go to the bathroom, every 20 minutes to check on your position. You certainly don't want to, cheat your employer by trying to do two things at one time. One, you're probably going to lose a lot of money trading because you're not really there and watching it. And number two, you're probably going to get fired because then you're not doing the job that they're paying you to do very well. So you don't want to do that. Another problem people have, very common when you're starting out, you don't have a big account. And for those of you that have less than $25,000 in your trading account, you're probably very aware of the Pdt Rules, which you get flagged as a pattern day trader, and then they limit you to 3 in and out trades in 5 days. So, you buy something at the open at 9:45, and then you sell it at 3 o'clock in the afternoon. That's one. And you get 3 of those in 5 days. And so while you can do, several active trades in a week, it's not that easy because, you take your first trade and you get stopped out after 10 minutes. Well, you've just used one of them, right? So now you got 2 left. So that can be a very frustrating thing when you're under 25,000 and you don't have that liberty of, trading in and out as you may want to do. And then, of course, there's overnight risk. And if you've been trading for any amount of time, you know that things can happen overnight that are not predicted. So, for instance, we had a nice bounce today in the market. This is Wednesday, September 15th. We've had, 5 or 6 down days in a row. We got a nice bounce today. And so you're sitting there at the end of the day. Do I want to hold my calls overnight? What am I going to do? So you stay long your calls, and then there's always that risk that tomorrow morning you wake up to a giant gap down, either because of news or, because, Asia had a rough session and then Europe had a rough session. And then you wake up and your calls are wiped out. That's never a fun thing to experience. So there's quite a number of problems that are very common amongst traders that I think micro futures will address. Now, first of all, I think we're all fairly familiar, at least with the term of futures. It's the ES for the S&P minis, NQ for the NASDAQ minis, the RTY for IWM, GC for gold, CL for oil, etc. These futures contracts, when they first started with the S&P back in the 80s and through the 80s and 90s, as the interest in futures grew, they added the other contracts, the Dow and oil and all these other contracts have developed over time. But what has happened since the 80s, when SPY was 700, right? The margin requirements back in the 80s were quite manageable for normal people, although mostly professionals were trading them back then. But as the value of an S&P contract grew and grew and grew and grew and grew over time, so that now we're 4,500. If you go look at the margin requirements for an ES contract, one of the S&P mini futures contract, they're quite staggering. For the NASDAQ, for the NQ mini contract, one contract, the margin requirement is like $17,000. And that changes over time based on, the value of the index. But not many of us are in the position of, laying out 17,000 in margin for one single contract. And so what the CME has done, and this started a couple years ago, but now it's getting more highly developed and more highly traded, is they came up with what's called the micro futures contract. And I've kind of outlined it here. A micro futures contract in general is 1/10 the contract size of the big boy, the mini contract. So it's 1/10 the size, and therefore 1/10 the margin requirement. So whereas an NQ contract might have a margin requirement of $16,000, when you go down to the micro contract, it's $1,600, much more manageable for quote normal people. Certainly within reason, if you've got even a $10,000 or $15,000 account, you can trade one micro contract quite comfortably, and not be burdened with a huge margin requirement. These futures, the micro futures, along with all the other futures, basically trade 24 hours a day. I believe there's a 45-minute window. I think it's from 5:15 to 6 p.m. Each day, where trading stops, and for a bunch of stuff to be them to do the backroom stuff with the contracts, blah blah blah, and then they reopen at 6 o'clock, and then they're most of them are closed on the weekend, and then reopen at 6 p.m. But that offers a lot of flexibility. Let me give you an example. You have a full-time job, 8 to 5, 9 to 5, 7 to 4, whatever it is, and you've got your job. Well, you can get up early, say 3:30 in the morning, 4 o'clock in the morning, when Europe opens. You would be surprised how much trading goes on in the pre-market overnight, and things really start hopping when Europe opens. So whatever happens in Asia rolls into Europe, and then Europe opens, and then that rolls into our pre-market, right? So, and most of you, if you know me, I get up at the crack of dawn, and I mean 4 o'clock, 4:30 in the morning, and there are things to do at 4 in the morning, trading that pre-market hours. And you wake up and you see, oh, we're S&P's up 15 or 20 handles. Well, if you're trading the micro contract, you can participate in that, right? So there are ways, and it's not without pain. I'm not saying getting up at 3 or 4 in the morning is not hard to do, but it's how bad do you want it? So that would give you an opportunity to get up early, do your trading, and then head to work. And there's some other advantages that I want to layer into that. These contracts are super, super liquid, way more liquid than an option contract. And what that does, it gives you the ability to set stops and targets in your platform that you can set it and forget it. So for instance, you get up early in the morning, or you identify a place on the chart where you get long, right? And now it's time for you to go to work. You can set your stop, right, based on your entry, defined risk, defined risk. And if you have a target on the chart, you can set your sell order at that level. And then if price makes it up to that level, your order will execute, and you'll come home and find out, my target was hit. The order executed, I made my profit. Or you come home and find out you were stopped out, right? Or somewhere in the middle where the contract is still trading. It neither hit your stop nor did it hit your target price. So then you roll into the next day. My point is, with these contracts, you don't have to worry about being skipped over. You don't have to worry about overnight risk. You don't have to worry about, sitting in front of your desk every waking moment, watching every tick. Because if when you put in your order, you also immediately put in a stop where you want to be stopped out, your order will execute. It will not skip over you. So you can either trade at night or trade in the morning, whatever you prefer. And you don't have to worry about, will your order execute or not. These are all very liquid contracts, and every tick is hit. And when your stop is hit, it'll execute. When your target is hit, it will execute. And also, there essentially is no slippage. You know that if you're an option trader, there's always that bid-ask spread to negotiate. If you're trading index options, those spreads are relatively tight. If you're trading other instruments, you may have to navigate that bid-ask spread. In the micro futures, the price is the price. If you set a stop at 131.1, that's what it's going to be. Now, there is a commission involved, and you need to look on your platform to see what that commission is, but it's very reasonable. It's not like $50 or anything. It's like a couple dollars. But you need to look at that on your platform to see what it is. And of course, one of the main advantages to the micro contracts is, of course, the leverage factor. And you can look at each contract, and it basically tells you what the leverage is. But suffice it to say, that's why people trade them, because you do have the leverage plus these other advantages of the contract versus the alternative of options or buying common shares or whatever the case may be. And then one of the most important advantages is this one here at the bottom. You don't have pattern day trading rules. I mean, if you want to sit, at your desk and bang away all day or all night and do 50 trades a night, knock yourself out. I wouldn't recommend it because you'll probably just chew yourself to death. But you're not going to have anybody saying you can't do it either. So that is a really, really big advantage to someone that has, a relatively modest trading account size. Now, what I've done here, and these are all CME contracts. You can do the research on all these at the CME website. They have little training courses on the futures, micro futures. It gives you all the specifics. I'm not going to get into all that. You can do some research on your own. But in general, if you put an M in front of the big boy contract, you'll get the micro contract. But there are some differences. This is for the Dow. M2K is for the Russell. MES is for the SPY. MNQ is for the NASDAQ. You've got gold, silver, palladium. There's a bunch of currency pairs if you want to be a currency guy. On the CME website, they have 5 or 6 different currency pairs. MCL for oil. You want to trade Bitcoin, knock yourself out. And the way you do that, at least on the Thinkorswim platform, and I believe it's the same whether you're using Schwab or Interactive, you put a backslash in front of these tickers, and that'll bring up the chart and the trading ladder for the futures contract. So if I've piqued your interest in these micro futures contracts, if using these would address some of these common problems, I highly recommend that you do some legwork on your own. Go to the CME website, open up a paper trading account, with your broker or, Thinkorswim or whichever one you want to use. Open up a paper trading account. Pick 1 or 2 of these that you think you might want to trade. For instance, I consider myself primarily a index trader. So, I've traded Russell, SPY, and the Qs, M2K, MES, M, and Q. When I want to venture out, and I will, I may look at oil or Bitcoin. I'm not really interested in trading currencies or palladium or whatever. Pick 1 or 2. Don't load all these things up. If you're interested in the Qs, focus on the micro contract M and Q, and play with it. Play with it in your paper trading account and kind of get the feel for how the ladder works. Get a feel for how it trades. Experiment with it a little bit. Become very, very comfortable with it before you venture into real money trading. Leverage works both ways, so you can lose a lot of money just as fast as you can make a lot of money, maybe faster. So that is something to be aware of. And also, the pattern day trading rules are probably there to protect you from yourself. When you're in the futures market, they're happy to take all your money. You're not protected in any way. Your broker's never going to tap you on the shoulder and say, why are you trading, 50 times a day? They'll take their commissions, they'll take your money, and then that'll be the end of you. So I would venture in carefully. It's nothing to be scared of, but it is something to respect from the standpoint that, if you trade anything you don't understand, you're more likely to lose than to win. So the point is, now that you've been introduced to it, find out if it's an instrument that would answer or address some of the questions that you had, or some of the limitations that you perceive there to be, with trading options or trading a small account where you're obviously limited in the things that you can and can't do. But like anything else, it's not a panacea, so don't perceive it to be. But I have found it's been a really nice addition to my trading. Over time I've become more and more comfortable with it. Putting on that first trade for overnight, I got to be honest with you, a little bit scared. You're putting something in and you're walking away and you're going to sleep and you're trusting that everything is going to work the way that you think it's going to work. And it did, and the more times you do that, the more comfort level you'll get with it. But you've got to develop your own comfort level with it before you go, venturing off. And, we'll talk more and more about this. I intend to do, maybe one or two follow-up videos about this on kind of lessons that I've learned trading the micro contracts. Maybe steer you clear of some rough water just in how you approach it. So I will do that. So let this be the wrap-up of this little introductory video on micro futures trading. I hope I've opened the door to possibly a nice solution for you, and something that will add to your trading toolkit, as it were. That doesn't replace options. Options still has its place. I got a bunch of them on, as every day trading. But futures have been a nice addition to my toolkit, and I'm glad I explored it. So now I want to kind of introduce them to you in a structured way. So remember, all these are CME contracts, so you can find them at CME on the web, and you can get all the particular details, and you can find out all the particulars about the commissions, etc., from whatever trading broker that you have. And by all means, remember, please start with a paper account, because that'll be a good way to get familiar with it and build up your comfort and confidence with them before you go live. So let's wrap it up there. This has been Chris Buss with Trader's Profit Compass. Talk to you next time.